Use on-chain data to understand Bitcoin. Welcome to Mr. Big. You may think the most important Bitcoin number is the price. It is not. The more dangerous question is whether most holders are still in profit or already underwater. A market does not usually break because the chart drops a little. It breaks when price gets close to the crowd's cost basis, and millions of people are forced to decide, hold through the pain, or sell just to make the stress stop. That is why today's video is about realized cap, realized price, and realized price bands. Here is the trap. The same 20% Bitcoin drop can be a normal pullback, or it can be the start of real panic. The difference is not the size of the drop. The difference is whether the drop breaks the market's average on-chain cost line. If price falls from a very profitable zone, many holders are still comfortable. But if price cuts through the cost zone, the psychology changes fast. People stop asking how much upside is left. They start asking whether they made a mistake. Realized cap is not the same as market cap. Market cap values every coin at today's price. Realized cap tries to value each coin at the price when it last moved on-chain. In plain English, it is like adding up the receipts for the whole network. One coin may have last moved near $10,000. Another may have last moved near $70,000. Realized cap adds those different cost marks together, so it is closer to the money that has actually been repriced on-chain. Look at realized cap as the foundation under the market. When it rises for a long time, more coins are being repriced at higher levels, and the network's embedded cost basis is moving up. When it stalls or falls, the market may be going through a reset, where higher cost coins move into lower cost hands. This is not a one-day trading signal. It is a slow measure of how much capital has been absorbed by the Bitcoin network over time. The important part is not only the absolute number. The important part is the direction. If Bitcoin price jumps, but realized cap barely moves, that can mean the quote is moving faster than the underlying cost basis. If price rises and realized cap rises with it, the market is absorbing coins at higher levels. If price falls and realized cap starts to roll over, that can mean coins bought higher are being repriced lower. In simple words, realized cap helps you separate a noisy price move from a deeper change in who owns the coins and where their cost basis sits. Realized price is realized cap divided by circulating supply. You can think of it as the market's rough average on-chain cost line. It is not your personal entry price, and it is not an exchange order book average. It is a network-level cost estimate. Above this line, the market as a whole is usually in profit. Below this line, the market is usually in stress. That is why realized price often becomes a psychological line in deep cycle drawdowns. In the local data for this video, Bitcoin is still above realized price. The latest price in the band file is around $77,000, while realized price is around $54,000. That does not mean price must go up. It simply means spot price is still above the network's rough average cost basis. If that distance narrows, the market's emotional temperature changes because more recent holders start feeling pressure. Imagine a neighborhood where the average home was bought for $300,000. If the market price is $500,000, a drop to $400,000 hurts. But most owners are still in profit. They complain, but they are not forced into panic. Now imagine the market price falls to $280,000. Suddenly, the same neighborhood feels completely different. Many owners are underwater. Some start thinking about selling before it gets worse. That is the kind of psychology realized price is trying to reveal for Bitcoin. The chart price is what everyone sees. The cost line is what everyone feels. One cost line is useful, but markets do not move in a straight textbook way. Realized price bands turn the cost line into zones. The lower zones can show stress, washout, or long-term accumulation conditions. The middle zones can show repair. The higher zones can show profit-heavy, crowded, or overheated conditions. The point is not to predict the exact top or bottom. The point is to ask where price is trading compared with the market's cost structure. The latest band snapshot puts realized price near $54,000. The lower half standard deviation band is around $76,000. The mean band is around $103,000. And higher bands sit much further above. Current price is near the lower part of this band structure, not near the upper heat zones. That is a reading of position, not a buy signal. It tells us where the market is sitting relative to its cost map. This is where many people misuse the tool. They see one band and treat it like a perfect support or resistance level. That is too simple. Bands are better understood as zones where behavior can change. In a lower zone, people may be scared, liquidity may be thin, and long-term buyers may start paying attention. In a middle zone, the market may be repairing, digesting, or building a new base. In a high zone, unrealized profit is larger, and the temptation to sell into excitement can grow. None of these zones guarantees the next candle. They only tell you what kind of emotional environment price is entering. Here is the simple framework. First, is Bitcoin above or below realized price? That tells you whether the whole market is broadly in profit or stress. Second, is realized price rising, flat, or falling? That tells you whether the cost basis of the network is building upward or being reset. Third, how does price behave around the bands? Does it bounce, reject, grind sideways, or slice through? Do not treat the bands like magic walls. Treat them like areas where human behavior can change. Based on the copied CSV data, Bitcoin is above the realized price line, so the market is not sitting below its broad average on-chain cost. At the same time, price is not pressing into the highest realized price bands either. That creates a more balanced read than a simple bullish or bearish label. The right question is not, should I buy right now? The better question is, if price moves toward realized price, does the market defend that area, or does stress accelerate? And if price moves toward higher bands, does new demand absorb the profit-taking pressure? This is how the data becomes a watch list instead of a prediction. The biggest mistake is using realized price as a single buy or sell button. It is not. Bitcoin can stay above cost for a long time. It can also stay below cost longer than people expect. You still need liquidity, macro conditions, exchange flows, market structure, and your own risk rules. The value of on-chain cost analysis is that it gives you a calmer map. It helps you see when the crowd is comfortable, when it is stressed, and when a normal-looking price move may be hitting a much deeper psychological line. So the short version is this. Market cap tells you what Bitcoin is quoted at today. Realized cap tells you where coins were repriced on-chain. Realized price turns that into an average cost line. Realized price bands turn that line into a market map. If you only watch price, every drop feels random. If you watch price against cost, you start to understand why some drops are just noise, and why others can trigger real fear. This video is personal research, based on public data only. It is not investment advice. Remember to like and subscribe. Thanks for watching, and I will see you next time.